he serves as the Chief Executive Officer of the Nashik Merchants Cooperative Bank Limited, Mr. Dixit Vishram Dixit.
That provoked me, and that one should be a thinking personality and give maximum output.
And how initial steps in one's journey often curb the way the path ahead is going to be.
There is a mention, say 25% of the turnover has to go through a particular bank, and 75% where a new bank has been allowed.
Hello everyone and welcome back to another episode of FaceTime with Leaders powered by Directors Institute World Council of Directors. I'm your host Tanay All, and today if you are anywhere connected to banking, leadership or governance, trust me, you're going to love this conversation. And the leader joining us today is someone who has practically lived every chapter that modern cooperative banking has written over the last 3.5 decades. We have with us Mr. Dixit Vishram Dixit. It's a name many of our viewers today would know because the career speaks for itself. Like, he spent over 26 years with TJSB, rising all the way to retail head and regional head. He took over as CEO of Janseva Sakhari Bank. He led critical functions at Cosmos Bank. And today, he serves as the Chief Executive Officer of the Nashik Merchants Cooperative Bank Limited, where he's driving growth, governance, digital transformation, and a culture of accountability. But what makes him so special is not just his experience, but the way he thinks. He understands the spine of a bank: documentation, risk, policies, systems, audits, compliance, business development, and he's redesigned many of those from ground up. So if you're listening today, whether you're an aspiring leader, a seasoned professional, or just someone curious about how banks actually run, you're about to pick up insights that textbooks simply cannot teach. Mr. Dixit, it's an absolute pleasure to have you with us today. How are you?
Very fine. Thank you, Tanay. You have explained everything about me.
Lovely, lovely. So, sir, you spent 35 years in banking, moving through so many roles and experiences along the way. For someone hearing your story for the first time, could you please take us through your career journey in your own words? Like, how did it begin and some of the key moments along the way?
Thank you. You allowed me to go back to 1990s where I started my journey in the banking. I should accept that while starting that journey, there was a reluctance. See, I was appearing for the interview for erstwhile TJSB, the Thane Janata Sakhari Bank Limited. And appearing for interview, I was just hesitant because the bank had a timing from morning 10 o'clock to evening 8 o'clock. And in between, there are 2-3 hours break. So it was a break banking. So initial thought of mine was, okay, I don't want this bank to be joined. Then one of the relative, my uncle, told me that you are appearing for the interview, you are not joining the bank. Let them select, then we will decide what to do further. But then whatever the interview that happened and the selection process completed, they selected me in the first list. And I joined and I was there for 26 years. Nothing happened like that. And see, that journey is a very, very educational and provocating for the management thought. See, for first year of my work, there was a lesson to me for the process re-engineering. I would just give a simple example. In those days, there was a Mumbai clearing and Thane clearing. So two different clearings were there. There was no national clearing concept that time. Then that clearing had around 325 to 400 checks a day, and a single person used to write that. And there was a huge pressure because the last check, if you want to enter into, it should be before 1 o'clock. So 10 to 1, entering into 325 to 400 checks would be very, very difficult. And then they were finding it difficult to push all the checks in one go. What changed that process and what provoked me to change that process was, you have seen the check. On the check, there is a account number and the name of the customer, right? Then on the check below, there is a white line That white line expresses about the check number first and about the details of the bank of which that check represents to. So instead of writing full name of the bank, full name of the customer, I used to write that account number. I used to write that the band starting for 400, which MICR code, which constitute to be 400 means Maharashtra. Then last second three digits would be the particular bank, and last three digits will be the branch. That was the first re-engineering process I started in my career, and that took it very fast. So the completion of that process was very fast, and simultaneously there was a transfer scroll. In a sense, whatever transaction that would be happening into the banking, it was like a transfer scroll. It was used to be written again into a transfer scroll as a control, so that the daybook is a concept that whatever work done in the total processes, it is summed into a daybook, and that daybook has to be the part of the further manual working processes. So in that, the left-hand side, there were serially numbered. Right-hand side, there were serially numbered. So likely that there are chances that the debit and credit vouchers, there would be a mismatch. So there may be 100 debits and there may be several 300 to 400 credits. Then taking the total on the calculator or the asset machine would be a difficult job. There also, within a 1 year's period, there was a change that I made made as a re-engineering process. So whatever that particular voucher coming to me, 1 debit and 7 credits, it will be only a single number. So that made that process very simpler, and tallying that transfer score was a very easy job then onwards. So this was the process that allowed me, that bank allowed me to make changes into their processes, even though I was not confirmed into the services.
Yeah.
So that provoked me, and that one should be a thinking personality and give maximum output.
Yeah. And how initial steps in one's journey often curb the way the path ahead is going to be.
Correct.
Yeah.
that definitely defines.
Yeah.
I was the person who was confirmed within 6 months.
Oh.
Then the first promotion I took within the 2 year span. It was unnatural that time.
Yeah. That's lovely.
And these all workings and thinking process that developed by the bank management, I would say, because they gave me the chance to relook at each and every processes and make those changes very swifter. And whosoever doing was not material for them, result was material for them.
It's a very big thing. 100%.
So while doing that, in entire journey, it starts from there.
Yeah.
Then to the officer level. For the first journey was the senior clerk. The senior clerk level, I was only for 15 months. And then I was promoted. Because altogether in that 15 months, I was only doing the work of an officer, not the senior clerk.
Yeah.
And I got that opportunity, I utilized it.
Yeah. Best thing to do in life.
Then officer to the branch manager to the senior manager to chief manager to assistant general manager to regional head, then to a product head. So I was retail lending head for a quite bit time. Then I was given an opportunity by TJSB to start the mutual fund business, to start the business of ASBA, to start demat accounts, and altogether was a very, very fabulous experience all the 26 years.
Yeah. Lovely, sir. Sir, you've seen banking from so many angles, so I just want to ask you a few questions. That you handle everything from SME loans to project finance and retail credit, right? Sir, in your experience, what is the most common mistakes banks make while assessing credit proposals, and what changes did you personally introduce to strengthen the credit assessment framework?
Okay, and I'll just explain that. See, when I started my senior clerk cadre, there was a first proposal I handled that was for the existing customers enhancement, and that was my initiative. Nobody would have given that chance to a senior clerk to make an underwriting process. But I took that. I requested branch manager that I want one proposal to be processed and bring it before you with the recommendation. And the first process which I did, I rejected the proposal. And there was so many question marks in the management all across, because that was a very good customer for Thane Janata Sakhari Bank that time. But I rejected. Then I gave the expression why I wanted to reject. It was because there was piling up stock activity in the business. The relative growth was not there, but there was a declining in the sales trend. Then the bill discounting process was started for him because there was a paucity of working capital requirement into his business. But it was not because the business was growing. It was because the delayed payments received from the debtors. And that three things made me to decline that request of enhancement. What happened afterwards, that customer got some other bank to be financed to the requirement of the enhancement, but TJSB did not did that. The Thane Janata Sakhari Bank did not did that. They adhere to my observations. That customer, after one year, became NPA to that newer bank. So the common process that you must know the customer very well. You must understand the cash flow of the customer very well. And without understanding the cash flow, if the person insists for the enhancements based on the projected turnover, which may or may not match in future, is the biggest mistake that bank normally do for the existing customer. And if it is for a greenfield project, again, there is a cash flow concept. And greenfield normally happens because there is a no background or more than 50% expansion into the business. So naturally, that expansion has to be carefully handled with the projections given, because projections come with the numbers. You don't give the reality of the picture unless and until you go deep dive into the projections given and the market of that particular product. And then who are the competitors? What is likely futuristic business avenues opened or closed to the customer? So all these analysis if one does, and simultaneously the existing customers' behavior. Supposing that interest servicing, then term loan EMI servicing is on a proper track, then even there are some mistakes into the projections, you can go ahead with that customer. But if this particular background is missing, then for that existing customer with the 50% or more than that expansion would be a very difficult task to do and to underwrite. In case of exactly without any background, if you are going with the greenfield project, then you only need to know the investor, that is the person behind the show. And if we don't understand, if one doesn't understand the business personality behind the show, who has to handle that business and take the background check of that customer, it's very difficult for anyone to go with that. Because naturally, whenever I was giving lectures for training purposes and upgrading skills to my subordinates, I normally say that if the account is becoming NPA, it happens only because of the bank. Bank doesn't take proper initiative, and that is why that account becomes NPA. I give you one example. Fortunately, today I'm sitting in Nasik. Say 7-8 years before in Nasik, there was an account that came before me. He was a doctor, and a color Doppler was sanctioned to the person. I analyzed it was a bank's mistake. What was that mistake? Because that Doppler had two different payments that bank even did not put into their process notes. That was from one big company. Every 6 months, that Doppler has to go with the upgradation. And the upgradation cost was more than 3 months EMI. bank, considering then cash flow, gave the period of 5 years, but did not consider this 3 months EMI, which is going to the company again 6 monthly. So it became a difficult proposition for that doctor to pay out every month, and then we rescheduled the account, and then it worked very fine. So that was the bank's mistake. Bank should have understood that in initial stages that this payment is going to happen even with the EMIs going on.
Yeah.
So they could have extended that period from 5 to 7 years, which I did later. And then that loan worked absolutely fine. So this is for MSME and the professional categories. We need to understand the proposal very well. It doesn't matter that how many pages that particular process note of underwriting goes with, but it should come with all the details and including the risk parameters.
100%.
In TJSB, we started for the first time the analysis of projection by reducing it to a level whereby it is break-even. So projections is a mathematical calculation. We used to reduce it as a sensitivity analysis, and we used to say that what is the boiling point of that particular account if the projections go haywire. So this is the way that the proposal should be treated, and then you understand the customer very well, like a scanning machine.
100%. That makes a huge difference when you're understanding their point of view. So you've accompanied RBI during audits, implemented ORBIA formats, and overseen compliance at multiple banks. From all those experiences, what is one compliance gap you believe banks often underestimate but actually has a major impact on their risk?
Not following proper guidelines. It looks very simpler, but it's the biggest mistake that bank normally does.
Yeah.
I'll give you one example. RBI has a guideline of IRAC, Income Recognition Asset Classification. And that guidelines are clear. They have to be analyzed by the system only. What normally happens is the criterion of a term loan and a criteria for cash credit or the overdraft loan are different. In the sense that term loan normally happens with the EMI, and if EMI bounces for the 90th day, it becomes NPA. It's a very simpler process. But for a cash credit or the overdraft account, if there are so many other combinations coming with that if. First combination is the drawing power. Drawing power in the sense that the particular month, the stock availability, debtors availability for 90 days, then after reducing it further to creditors, payment, whatever portion comes is the drawing power for that month. If the customer misses out for 90 days, then the drawing power is to be construed as a zero. So this is the one combination that if you are not with your customer, you are not following with your customer, your good account may also convert into a bad, just because non-compliance of the control statements to be submitted on regular basis. Then the part of turnover. Say for example, a particular bank, there are many cooperative banks who don't have the facility of internet banking. So they have to allow internet banking facilities for their even cash credit account or overdraft account holders to be allowed by other banks, and that process starts of the siphoning of the funds as well. So there is a requirement of a proper control. So if you are allowing that particular transaction to happen into a different bank, there is a mention, say 25% of the turnover has to go through a particular bank, and 75% where a new bank has been allowed because of the transaction non-availability on internet basis. So once it is done, the follow-up remains for 25% turnover. And if that is absent, again, for non-operating the account, but operating the cash credit limit in fullest way becomes a calculation for NPA. So these are the combinations whereby if they are not properly controlled, the guideline is very simpler. 90th day interest payment is not done for overdraft, stock statement is not there, account operations are not there. Please classify the account into NPA. So this is a very simple process, but it has a lot of monitoring and it is often overlooked. Biggest problem that bank ever have faced, and even big banks have also faced, and simultaneously, those who have been devolved accounts, they have to be reported to CIC. Reporting to CIC also remains to be a big challenge for the banks.
Yeah.
Sometimes it is forgotten, sometimes it is not followed by the particular deadline. Normally, what we do in our existing bank in Namco, there is no control whatsoever for any reason. If the account has to be classified as NPA, it should go with the system. And when that NPA will come out, only when whatever problems are recognized as a part of NPA, they have been solved. In the sense, if the EMI has come into 90 days, pendency, 90 days EMI has been paid, account becomes performing again. But the system will prevail upon, system will decide, not the individual decision, not the branch manager decision, not the head office credit section decision. And simultaneously, for the purpose of turnover, it's a big challenge for making it as an NPA. Another point remains is when it is a proprietary concern, then the PAN number of the individual loan and the proprietary loan remains same. So in that process, this mistake also happens with the bank because there should be one PAN, one UCIC number, that is Unified Customer Identification count. So if it is not that, then this also mistake normally happens with the bank, and they came into inspecting authorities, big remark. And that remarks remains for a continuous period of 2 years. That becomes a persistent problem.
Yeah.
So that is to be handled very critically, very fast, very agilely. And these controls have to be established through the system because women are prone to the mistakes. Machine is not prone to the mistake. Machine can be defined and it can be followed by the machine as a 100% accurate level.
True. So the cooperative banking sector in India is going through a lot of change. Increased regulatory oversight, tighter compliance expectations, higher technology standards, and rising customer expectations. From your perspective, what is the biggest industry shift corporate banks need to prepare for in the next 5 years, and how should CEOs approach it?
And I can tell you that there is a makeshift between the working of the Reserve Bank of India looking towards the cooperative sector. Now they want to free cooperative sector and make it a common platform for all banking industry together. And cooperative bank feels that's as a challenge. That's a big mistake. So cooperative bank is now seen as a global player. So that is why they want all the rules and regulations that are available to private sector banking, public sector banking, NBFC, small finance banking are similar with cooperative banking. So these challenges initially remain, but these are not challenges. These are the instruments of growth. How you look at it is a different way. If you feel that as a challenge, then it is most likely that you will not come across and you will not cross it. But if you feel that these are the parameters which allows bank to work like a SFB, work like a private sector bank, work like a public sector bank, then there is a definite growth. So first mindset is that the tightening processes that has been adopted by Reserve Bank of India is to free decision making in the cooperative sector. It is not to stop cooperative sector from doing business. One part. Second, an important part is In any banking industry, there are two pillars of that. One is information technology, and second one is the HR. These two are the driving forces henceforth. In earlier old days of banking, it was like a credit decision maker was a powerful personality, investment desk was a powerful personality, but both things are now being controlled by softwares. So softwares gives you the analysis by LOS, by investment techniques, they give risk management reports, and then the decision becomes very easier. So the technology is the driving force now, and the bank which is using the technology just ahead of the requirement of the domestic customer can get the business.
Yeah.
And about HR, where HR plays the role, HR plays the role is training to that software, giving high ethical values in the organization, bringing that organization as a brand value nearest to the local area they are operating with, posturing that organization into a software bound business and opening new branches or transforming the existing branches to a newer area. These decisions play a lot role now. So those CEOs, I would say, those managing directors, I would say, who are concentrating on these two pillars would be rather more successful in running the business. However, the strategy of growth is also an area whereby the managing director or CEO has to make a combined role, in the sense he has to give the futuristic view of the business for, say, next 3 years, next 5 years, next 7 years. Simultaneously, he has to upgrade to the board that whatever compliance culture, whatever operational risk, whatever credit risk, whatever investment risk, whatever interest rate risk, whatever market risk is coming across to them, and how ably a particular bank can face it and go through with the victorious position by achieving the targets. Again, I would say that target is a penetration. It is not transferring the ideology of bringing something into the fold of the business to the last person. No, it is definitely not. It is make them understand that they themselves have to create their own stake in the growth of the business of the organization, so that the particular activity becomes a very easy job for the purpose of understanding the and chasing the target. See, in any way, the target sets are also a very important role. Setting is also a very important role. Once we did that, doesn't end everywhere. So then you will have to take it to the last person, make them understand why this is necessary, why they're important in the journey of the accepting this particular high level targets. And in any way, any point of time, 65% or more, if the target is achievable, it is with market. So in private sector banking, in public sector banking, the ratio is hardly 65% to 70%. So once you are achieving that level, you are doing good business.
Yeah.
And for last 4 years in Nasik Merchant Cooperative Bank, since I started my career as a chief executive officer again, this bank has bagged more than 15 Best Bank prizes.
Lovely.
It happens only with the teamwork.
Yeah, yeah.
It is not because Dixit is there. It is because the team understands the value to go for the purpose and to achieve it.
Yeah, yeah, very true.
So this is what I think that every CEO has to follow, because he's a means to follow that. He's not the face of the organization.
Yeah. Okay, sir. Now time for a very own rapid fire round. Some quick questions, and all I request you are quick answers. So are we ready?
Okay, let me be. Okay.
Okay. If you weren't a banker, which other profession do you think you would have enjoyed?
Auditor or the financial advisor.
Okay. What's one habit you're genuinely proud of?
Mm, have been genuinely proud of. So, could say reading. Yes.
Okay. If you could instantly become an expert at any hobby, which one would you pick?
Teaching.
Okay. If you had to pick only one sport to play for the rest of your life, what would it be?
Table tennis.
Okay. A
Because
book
I
or
happen to
yeah.
be the winner several times.
Oh, lovely. A book or idea that has stayed with you.
See, over across, there are many books you can say I will say they helped me. The first such was the Peter Drucker. In 1995, he wrote his first book on service industry. And that one sentence made change my focus in entire life. And that sentence is, in India, there are many tiny people on tall heights.
Yeah.
Second, I would say Stephen Covey, Seven Habits. And for the management, I will again refer the Marathi book Raja Shivaji, written by Ranjit Desai. That is a fantastic book that has narrated every part of Shivaji's warriorship, but into the angle of management.
Hmm.
If we carefully read that book, we will understand that how difficult it was to manage against the Mughals, against the Adil Shah, against the Qutub Shahi, and still maintain the rapport with the citizens.
Yeah. Very true.
So that three, I think, books I would say they guided me all across.
Yeah. So, what's your favorite way to unwind after a packed work day?
You remain a family person,
Yeah.
right? So Saturdays, Sundays, wherever available, you are the first person to be picked for the work.
I feel you. Yes.
So enjoy that work also,
Yeah. True.
and some traveling and all across.
Yeah.
That's it.
So, which city feels like your second home?
Already, I have Ratnagiri near seashore. It's a flat, but it's a beautiful place to stay.
Yeah. If you had to describe yourself in just one word, what would it be?
Mm, I would say strategizer.
Lovely, sir. Great, sir. That gets us to the end of our rapid fire round. Now, on to the slightly more serious questions.
Yeah.
Mr. Dixit, I want to shift the conversation to something every leader deals with, especially in banking, and that's trust. Because at the end of the day, the entire industry runs on trust. Customers trusting the bank, regulators trusting the system, and teams trusting their leaders. So, over the years, we've all seen situations in the banking world, both India and globally, where things went wrong because governance or ethics slipped somewhere. When you look at those moments as a leader, what is the biggest lesson they've taught you about doing the right thing, even when no one is watching?
Um, Instead of quoting some other examples, what I'll do is I will give my own example. You must have heard from the paper about Namco's problem in the last Maharashtra Assembly elections. That few mule accounts were allowed to open in one of the branch in Maharashtra, and that turned to be a very difficult situation, very precarious situation. Those accounts were open. The personalities were there. The account opened of a genuine person. It is not that the person's face was not there, but those persons did not operate at that account was the question. And that all happened on electronic transfers. So within 8 to 10 days, until we identify it, there was a huge transaction that already had taken place. What was governance lacked at that time was the branch manager and the assistant branch manager did not understand the problem in initial stages. And they collaborated that problem. with understanding or without understanding, I don't know, but they collaborated. Then when we understand after 8 days that this problem is going on, we debit frozen all those accounts. Then we made an audit immediately. After doing that audit, we found that there were some gaps into KYC as well. In the sense, the Aadhaar cards and PAN cards were not confirmed online. Now it is possible that every account opening, these two confirmations are even necessary. Then our first thought and the first governance concept was to make those complete. So without telling to the branch manager, we just told them that do this work, complete this. We kept mum for 4 days. All 14 accounts were verified by the same persons. Because OTP goes to their mobile. The verification happened. One fine morning, they complained that our Aadhaar card and PAN card OTP was correct, but the transaction debit credit has not been received by us. They allowed one or two persons to operate their accounts with or without any intentions. That we are not the privy to those identifications and investigations by the police. But then we started playing and recovering from those problems. First recovery was to get verification of PAN and Aadhaar. Second, immediate day, we took an appointment with RBI SSM. We met him. While we met him, our program was very clear. All those transactions, it was in hundreds and thousands, were reported to STR, suspicious transaction reports on FIU. We explained to them. RBI told us to do it for the fraud risk management portal of the central ministry. We came back, we did it. And this swifter action saved bank from very difficult position like Paytm. You've seen that the mule accounts found in Paytm, and Paytm was not allowed to open the accounts for several months. So, lapse, but the governance, both lapse of governance and then again the governance. These problems were restricted to a particular branch, to a particular branch manager and assistant branch manager. And everything was regained and recontrolled immediately. This is one example.
Yeah.
And this is a live example.
Yeah.
So when the problem has arisen, you should not get fumbled. You must understand the problem. You try to analyze the problem, and you try immediate steps to come out of it.
Very true.
And how I could visualize this, there was another example, say in 2000. That example is a guide path for me in every difficult situation. I was a branch manager that time, and the branch closes at 3 o'clock. One lady came into cabin. She said that my 38,000 were lost, stolen from your account. And she fainted. Then the lady staff from my branch helped us, put her on chair again. We gave her tea. Then we started discussing with her. She said that I have never taken a checkbook. Who comes to associate you? Well, no, I come all alone. Then we started, who has given the checkbook? Our assistant manager has given the checkbook. I called him, I discussed with him. He said that one person was with her. Then she said that yes, my neighbor's son used to come with me in the banking, he took that checkbook. He withdrew that amount. Then we went directly to that place. We caught that person. We bring him to the branch. We ask him several questions. After 2 hours, he explained wherever he has expended and expensed that money. We recovered 34,000 from him on the same day. We recovered, we handed over to her, and on the next day, we filed a police complaint. So this type of working was the base that gave me the understanding that whenever you may have a problem, but you may have a solution as well.
Yeah.
Finding that solution at right time and right spirit is very important.
Very true. So you've recently been associated with Directors Institute, and that's not a small step. We would love to know what made you join Directors Institute and how has that experience influenced the way you look at leadership and governance today?
It has also changing my understanding in total.
Lovely.
I am changing the organization from Nasik Merchant Cooperative Bank to a managing director of Dombivli Nagari Sakhari Bank on 15th.
Okay.
While doing so, I am considering this Nasik Merchant Cooperative Bank as my first appearance as an independent director. There is no requirement of both the cooperative banks to be an independent director. But I wanted to establish that my management decision to allow me to go to Dombivli Nagari is correct. So I suggested them that I'll use this particular concept of an independent director where I don't have shining authority. I don't have an authority to control and regain the organization, but I will see to it that it navigates properly.
Yeah.
And while starting this Directors Institute and considering the Gulf University and the recent programs which I am undergoing, the 4 certifications, that is changing my thought process with more definite way. And that is giving me some different different outlook, both the things. I have to look out for within and the outlook changes.
100%.
So I think this is the best institute, and the way you have presented your courses, that's fabulous. The one course I will explain to you is the IPO. Let's go through the IPO detailing which you have done. That's fantastic. That's really fantastic. That will make understand a layman.
Yeah. Thank you so much. Thank you so much for those kind words, sir. It's been a wonderful conversation. And what I really enjoyed today is how simply and honestly you shared your own journey from where it started to how you think as a leader today. There's a lot of experience beyond the words. And I'm sure our listeners would have picked up a lot of insights from today's conversation. So thank you so much once again for joining us and sharing your story.
Thank you, Tanay, to you as well as the Directors Institute for giving me this opportunity to present myself. Thank you.
To everyone tuning in, thank you so much for spending your time with us. I hope today's episode gave you clarity, inspiration, and a better understanding of what real leadership in banking looks like. I'm Tanayol, and this was FaceTime with Leaders, powered by Directors Institute World Council of Directors. We'll see you in the next episode. Until then, stay curious, stay aware, and as always, have fun in your journey. Thank you so much.
Thank you.